Hey all, it is Thursday, 8:27. I'm going on my third attempt on this one. I got people keep coming in and chatting with me. So see if I can get you guys some info. I wanted to do a midweek recording here because there's some interesting things that happen in the market today. Well, first off, background's different. Just kind of showing the clouds are coming into Arizona. We're getting into the monsoon season. Kind of cool. It makes for some really cool sunsets out here. We actually always have really cool sunsets in Arizona, which is one of the really cool parts of it. But the sun does kick our ass during the day. So market, we're seeing within the mortgage-backed securities, we're seeing a lot of volatility today, which interesting though, it settled out to where, we're back within the range where we were, but early this morning, man, we were taking a beating. It spiked up pretty well as the day opened, but then Jerome Powell talking pounded it way down. In fact, we can go ahead and look. You can see here how it trades just in moment by moment during the day. You can see how much swing we had today. So I couldn't even get rates earlier this morning, which is pretty wild that they wouldn't even release them to us because of all this extreme volatility. Now, what happened? What did Jerome Powell say? So he got to talking about the fact that the Fed is trying to, one, kind of stabilize the economy, of course, stabilize the markets, but then they're also looking to potentially allow inflation to run a bit for the terms of what they're looking for the stability. So what they had indicated when you're looking at the PCE, the personal consumption expenditures rate, is their favorite form of measurement for inflation. I guess since the Ben Bernanke days, they've talked about trying to keep it right around that 2%. Well, the claim is right now it's 0.9%. Well, we know that that's not accurate. But when you're looking at what they're measuring, they're saying that they are inclined to let it run above 2%. To be able to get there, we have to let inflation run over 3.1% to get there. For the time being, one, I don't know how they plan to accomplish that. I have no idea what the plan is there, but their talks about inflation is negative to bonds. So anybody who is investing in a long-term instrument like a bond, right, they're going to get paid back over time. They're going to get paid back with a declining instrument like the dollar. They don't want to be tied up into that. And if the Fed's saying we're going to let inflation run, that probably spurred a lot of this sell-off. Then you get that sell-off going, and then you even got some technical things where computers start to kick in and start to sell like crazy, because there's already things set in the computers, and as far as the trading there on Wall Street, to start forcing some of these sales after a certain point. So then you saw all that kick in and push us down the way that it did. Well, some clearer heads come in and start adjusting for it. And as you can see, we're starting to go back down again even now. So the market is not liking that movement. But we've also seen the last time the market didn't like the movement of the Fed, that it took a little while, but they did come back. So I find it, kind of interesting. I saw that big old swing today. And I think we're going to get back in here and start getting back up into these higher points, because the Fed's going to be pushing capital into mortgage-backed securities for the extended period. And we'll see where that ends up going. So just want to give you a little bit of data today. And if you're trying to reach out to us, get some interest rate stuff, you might get some skewed information from us, because it's not going to be reflective of what's really going on right now because of this extreme volatility in the market today. Appreciate you guys watching. Appreciate you subscribing, ordering the books, going to the QJO Initiative. And we're going to get more data out there soon. We're trying. It's just a lot to get done. Thanks for watching, and thanks always for the trust.